Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Thursday, the 2nd of May. I'm Daniel Lam, your host for the podcast. So on Tuesday, we spoke about how the SOFR options market was pointing towards no rate cut to one rate cut this year, and there was a 30% probability of a rate hike by the year end. So the FOMC meeting overnight was more or less in line with what the options markets were implying. The key forward guidance section of the post-meeting statement was unchanged from March, but the statement did state the lack of further progress in getting inflation back down to its 2% target. So Powell did acknowledge that the committee takes some signal from the past 3 months of strong inflation data, meaning that the expected timing of the first rate cut has been postponed. But he also stressed repeatedly that the committee's focus remains on the timing of the first cut and not on the possibility of rate hikes. So asset prices initially saw a dose of optimism, but then it faded away towards the end of the session. So for example, the S&P 500 index went higher when the FOMC statement came out, but closed near the day's low as details came in from the press conference. US 10-year Treasury yield came off, but now it has recovered some of the fall. Now to me, it seems that the tough fight against inflation is making it challenging for the Fed to keep its credibility with market participants. So I believe it is still fresh in investors' memories that back in 2021, there was a strong narrative of inflation being transitory. And then 2022 became an epitome of the phrase, "The rest is history." And of course, over the last 8 months or so, the narrative of the Fed rate cut has seen that going from 5 cuts this year to now, probably no cuts at all. So that's why you see the reaction of asset markets overnight. What that means for investors is that they do need to watch out for the potential of a return of volatility in the markets because of investors' increasing skepticism about how much the Fed is really having things under control. So we believe in the importance of having inflation hedges in your portfolio. We continue to like the opportunistic idea of long US tips, and we are also overweight the global energy sector. Oil is helped by tight demand and supply dynamics, and energy companies having potential upside to their earnings. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.